But now let's bring in George Tsilis, senior markets correspondent here. George, I wanted to discuss Qualcomm with you because this stock has been on a run so far this year, up over 40%. And it seems like their AI chips, their new Snapdragon chip, everybody loves Qualcomm now because this stock has been choppy over the last couple of years as far as trading goes, but it's been quite a move here in 2024.
It has. I mean, you're right. If you look at the last few years, there was a period where it was actually down quite a bit because some challenges it faced from competition. ARM Holdings is one of the competitors, Huawei, in terms of mobile chipsets. But I think if you look at Qualcomm, at least in the last 52 weeks, you mentioned year to date, it's up over 40%. In the last 52 weeks, it's higher by 80%. And this is a company that's very well positioned, I suggest, when it comes down to the Computex. This is essentially, when you look at their business, it's about computing technologies and communications connectivity. They're one of the leaders globally in mobile chipsets and connectivity devices. 20% of their sales come from Apple. Apple has tried over the years to, bully Qualcomm into accepting lower prices for their licensed technology. Intel was also a partner for Apple in their modem chips, and effectively Apple conceded they're sticking with Qualcomm, and Qualcomm now is really expanding their processor technologies, which includes, again, power management, computation, as well as mobile connectivity. And so in essence, they have such a great technology that is more efficient. They can actually compute as well as connect, and that is, again, something they're taking away from Intel in terms of Intel's mobile market share on a global basis. Now, if you look at what's happening just from a mobile device standpoint, mobile and tablets are really going towards Snapdragon chips, including Microsoft's. They have their tablet and Surface products, which actually use Qualcomm's chips as their main CPU versus Intel chips. So they're essentially in these periphery devices. And I think if you look at the Copilot aspects of our AI that now Microsoft is going to include in part of their PCs, Qualcomm is the major supplier for Microsoft. And so I think this is a company that's extremely well positioned because we talk about ARM Holdings and power management. Qualcomm has that technology. They have computational technology and connectivity technologies integrated. So I think this is a company that's very well positioned on a forward basis for AI acceptance and, of course, AI integration across the periphery device world.
George, the numbers are gaudy over the last months and year, and they had a big beat on earnings. You're right. They dominate handset. They dominate automotive. But, George, 40% of their revenue comes from China. And Huawei and a company I'd never heard of, Unisoc, I guess, are pretty big competitors building chips in China. Do they have China risk that you don't have to pay attention to it, but boy, the stock is overbought and teetering on an all-time high?
It is. I mean, if you look at the stock, I mean, obviously it's still trending by both above its 10 and 20-week moving averages. So it's a very powerful trend in Qualcomm. I think you bring up an excellent, risk position to consider in Qualcomm. I think what's happening in China is they're moving up the value chain. They want to essentially, create their own CPU manufacturing to compete with companies like Taiwan Semiconductor. And I think in the mobile handset markets, Qualcomm is still very much a leader because their technology is so good. But China is certainly a competitive threat, I think, to Qualcomm. And there's also risk in China for Qualcomm because Huawei and even companies like Samsung in Korea utilize Qualcomm's technologies. But, I think the elements behind Qualcomm as a stock, irrespective of the price move, right now, the estimates for 2024's earnings are close to $10. So it's trading around, 21 times, this year's earnings and around 18 times next year's earnings. I mean, its 5-year average is around 17 times. So it's trading a little bit rich, I would say, considering its 5-year average. And its growth rates, if you look at them over the last year, sales were actually down year over year. They're only expected to be higher by about 1.5% this upcoming year. And earnings are expected to be flat to slightly higher at 5%. So it's really trading, I think, based on multiple expansion, not necessarily too much growth, but I think their market share and their technology really positions themselves very well to enhance what's going on with AI, because now we're going to see computers and mobile devices have built-in AI, and Qualcomm's technologies are, like I said, very efficient and ubiquitous across the board.
Yeah, I like the fact that, George, you brought up that ARM angle here, ARM Holdings, because Qualcomm is digging in deep their heels and trying to ramp up that technology, because it's going to be all about efficiencies as the power used for these AI chips explodes to the upside. So everybody wants something efficient, and they're competing well with ARM Holdings, and maybe that's why we're seeing the stock at or near all-time highs. All right, great stuff. Thanks to George Tsilis, Senior Markets Correspondent here, breaking down Qualcomm.